All right, so I was back testing, and I like this day was just absolutely beautiful. The intraday volatility that we have here is amazing. I really wanted this on my channel. I wanted this as a case study. So I just want to hop into the daily chart. As you can see, we're kind of retracing here on the daily chart. We start the day, we trade above previous day high, and if we notice here on the daily chart, there really is no imbalance here at all. There is like kind of this inversion right here that I did have marked, but I'm not marking it within these charts. So notice how we are trading back up into that. And here's a daily volume balance here as well. And then notice how that daily volume balance is pretty much that new week opening gap that we're going to look at in the lower time frame. So as you see here, we have volume balance here, a BISI, an inversion fair value gap. And then all of this is sufficiently balanced. So it's going to be pretty hard to trade through this. If we're looking at this chart right now on the daily chart, upside objective for me would be this SIBI here, but and first we would have to trade through these wicks, so we might have high resistance, so we might get a day like this, which makes pretty perfect sense. And if we look at the news calendar, it's NFP week, it's a Wednesday, so try to get trading done by the AM session, although there is a very nice lunch macro within here, and then the PM session kind of consolidates, and obviously at 4 p.m. we just have a big displacement lower. I would assume, I didn't check, but there probably is some type of earnings report that released at 4 p.m. I would assume. I didn't check, so I mean, I guess that's kind of just what you got to do when you backtest. But as we see here, if we're just on the 15-minute chart, we do have some SMT here at the high. It's very small. It's not as prominent as I would like it to be. Like normally I would like to see an SMT with like this high and this high on ES. But we do have a very small kind of SMT there. It's still going to be influential, and that's showing the Kraken correlation. Notice what we have here, 830 opening price. We're failing to manipulate above that. So the fact that we're failing to manipulate above an 830 price, and then we're breaking down at 930, we have displacement. Boom. Deep retracement here. What is happening here at ES? Oh, we don't actually have SMT. We have SMT here at that 930 high. I thought ES traded above. That would have been nicer if ES traded above, took 930 high. But we have a deep retracement here. There's already an SMT. We're already in motion. Look at order flow. What are we doing? We're repricing to this this order block right here on the 15-minute. And right here at the lows, this is the only thing else I want to show with ES and NQ. We have SMT there, and then ES comes all the way back up and then takes this high here, and then we retrace. So SMT is not end all be all. It just helps you kind of see behind the scenes of what's actually happening. And I want to look at the hourly chart here real quick. Look at that hourly immediate rebalance right here at 10 a.m. We immediately rebalance at 10 a.m. and then we displace lower to where a fair value gap. We can refine that though to a 15-minute fair value gap. And I want to put on these annotations. I know there's going to be a lot of them. So right here, we have this 15-minute gap. If we look at these though, like all this is balanced. We have wicks, we have buy side delivery, sell side delivery, buy side delivery, sell side delivery. This here right here is the only is the gap before that. So it makes sense for us to retrace into here. We don't really need to retrace into here because this will act as a balanced price range, and that's exactly what we end up doing. And we end up putting SMT there, and then we end up trading higher. So here we have a deep retracement at 930. Okay, and is there anything I want to show up on the 5-minute? We take off the annotations first. Right here, we're trading lower SMT, 5-minute change of state delivery. Then we trade higher, 5-minute order block, trading higher to new day opening gap. Then we're trading lower. Sell stops are accumulated here. We're color outside of that new day opening gap here. Then we're trading into the current new day opening gap. My current new day opening gaps are yellow, and then we're trading into a new week opening gap. Isn't that beautiful? High of the day, new week opening gap. Low of the day, 15-minute BISI. Or I mean, I guess high day up here, but we're talking about the AM session. Here we have SMT. We break down. We're failing to manipulate above that. We're trading lower. Deep retracement here after trading into a new day opening gap to where we're doing a 1-hour immediate rebalance. You look at the 9 a.m. open. Look how we trade right into that. That is beautiful. That is a immediate rebalance on the 1-hour chart. That's what this looks like. It looks like a deep retracement here. It looks like, oh, we might be reversing here. Oh, this might be an order block. We're just doing an hourly immediate rebalance. We're trading lower. Displacement through a new day opening gap. What does this now become? Discount array. Beautiful. What does this now become? Order block. Trades into that. What does this now become? Propulsion block. This candle, mean threshold, or constant correction of that. We're second that. Boom, displace lower. What is this? Order block, but what else is it? Order block and immediate rebalance. That's an array I've been noticing. We trade lower. Initial leg to generate liquidity, come back lower, SMT forms, and then we get that market structure shift. Order block is held, propulsion, trade up to new day opening gap, consolidate, manipulate, distribute. And let's look at this delivery on the 1 minute time frame. And we can put on the annotations. And as we can see here, we have true day open. Above true day open is a premium. Below true day open is a discount. We also have new day opening gap. Above that is premium. Below that can be discount. And notice how as well they're pretty much kind of very close to each other. So here we have 930. We open up. Here's an opening range gap. I actually deleted it then. So here we have opening range gap constant encroachment. You can drag that out. Look how we trade to that within the first 30 minutes. And we actually fill that opening range gap right here, trade into a new day opening gap. And then look at that same sensitivity right there. Opening range gap constant encroachment. Very nicely. And then I just want to drag this out for the rest of the day. Sensitivity. Then we're trading back into that. So the fact that we're trading back into an opening range gap means that we're kind of consolidating here, but there's still very nice volatility here. So we're trading up, and we're actually taking a 930 candle high. We don't take this. We're just we're trading to the 9 a.m. opening. That's what we're referring. That's what the algorithm's referring to. So originally trade lower. We trade through a new day opening gap. We have this initial push lower, and then what? People are shorting this. People are shorting this. People are trying to chase this. We're looking for that gap closure. Then what do we have? Stop hunt right here. Then what is this? An order block gets formed right here. What is this? Balanced price range with the wicks. And what do we have here? Immediate rebalance right at new day opening gap. Constant encroachment. Beautiful, beautiful, beautiful. Then we trade lower. What is this? SIBI. Looking for that new day opening gap. That gets traded to right there. There might be like a 15-minute fair value gap that we initially traded into. Yeah, right here. 15-minute fair value gap right there that we initially trade into. So we trade into that new day opening gap. Then we're kind of just waiting. 950 macro opens up. What happens here? 950 macro, a price run will originate. Excuse me. What do we get? Market structure shift. Imbalance. 2022 model. Perfect. What is this as well? This is a breaker. Trade that out or extend that. And then where are we trading into? This order block. First order block created within the opening range. What is this as well? That's that daily volume balance. It's also that new week opening gap. Beautiful. Look at the bodies. Look at the bodies respecting that level. So what are we doing? We're taking minor buy side here. What is this now? Intermediate term high, short term high, failure swing at constant recurrence with a 1 minute wick. Then what is this? Right here. Boom. Order block on the 1 minute. We just trade it above that. We mohawk to constant recurrence of this wick. Then what do we get here? Displacement. That's telling us. It's indicating. Then what are we doing? We're trading back up into new day opening gap. And notice what else are we doing? We're taking a short-term high right here, and we're trading right almost to constant recursion of that new day opening gap. Very nice 2022 model here. So what do we have here? 2022 model, 2022 model. Very nice. And then we displace lower. We're not really displaced, but we deliver this very efficiently. No inefficiencies here at all. Immediate rebalance, immediate rebalance, immediate rebalance, immediate rebalance, immediate rebalance. Trade to where? New day opening gap. Retracement to where? Short-term high. Boom. Short-term high taken. Where do we trade to? A low. A low right here. What is this? Sell stops. Flooded. Sell stops flooded the market right here. And what do? We trade higher. New day opening gap. Now used as a discount array to send price where? This inefficiency is inefficient. Not anymore. We trade into that. Then what do we see here? Displacement. What is this? Like, isn't this beautiful? We deliver on the downside. What do we need? Efficient market delivery. What time is this occurring? 10:50 to 11:10. Very nice. That's that macro. Second macro in the AM session. What do we trade lower? Order block right here. Beefiest up close candle. I'm not using these. I'm using this one. Boom. Beautiful. Also, what does this have? A fair value gap with it. This doesn't have any fair value gap with it. This has a fair value gap with it. And what else does it have with it? New day opening gap. Beautiful delivery right there. And then that's when we trade to where that 15-minute BISI. Like let's look at this price run here. Even here to here. Very nice, very beautiful. Now what are we getting? We're getting that run, that first initial run. Okay, we made a low of the day already. Nope. We come back down, take sell stops. Then what do we get here? We get SMT. Now that run is kind of confirmed here. Not confirmed, but we want to see factors indicating that we could possibly be reversing. We don't know yet. We are in a discount. Notice because what? We're below true day open. Anytime we see an SMT above or below true day open within the AM session, smart money is either accumulate or not always, but majority of the time, I would say about 80% of the time, smart money is accumulating that for their daily range. Accumulate that for daily range power 3. What is this? They're distributing. Then what do we get here? Market structure shift. Was this inversion fair value gap? Notice how this array is now getting respected here. Then we get displacement higher. Then what do we get here? Beautifully trade into. What is this? This, in my opinion, is one of the highest quality order blocks. We take liquidity here. It's a very beefy down close candle with pretty much no wick. That is one of the best order blocks. Then we trade higher. This now becomes our breaker. Technically, this whole range does. But the last up close candle is going to be the most significant. We're trading higher. We're kind of mohawking outside of that breaker here. Then we trade higher to where? Buy stops. What time is this? Lunch macro. Lunch macro delivers is going to run on profitable stops. Who is profitable so far? Short positions. Short positions are profitable. And where else are we trading into? New day opening gap. This is one of the textbook days. One of the textbook days that I've seen. Like absolutely everything that you could want to see. And what do we get here? New day opening gap. Displacement. What is this? Change of state delivery. What is this? 2022 model. Where are we trading to? New day opening gap. What is this? Fair value gap right there. Imbalance right there. Order block right there. Look at that delivery. Very nice. Displacement. And now what do we have? We're entering the PM session. For PM session, we preferably want to see lunch lows get taken to trigger a buy model or a reversal. In this case, lunch is the reversal. So in order to see a continuation, we just want to see some form of stop hunt to see then maybe possible continuation within the PM session. So what do we get? 130. What is this? This is the 130 opening price. We can drag that out in time. We want to see manipulation below that. What do we get? Well, we're generating liquidity. Then we get manipulation into sell stops. This rate now triggers a buy program. And now what are we looking for? We're looking for signatures. What do we immediately get? The last two down close candles. We trade above that. As soon as we do, we're now in a buy program. Notice we're leaving this as a breakaway gap. We're using that new day opening gap as an array. Boom. Immediate rebalance. Trade higher. ICT was talking about this in a live stream, but I believe this whole thing is the volume imbalance. So I just want to bring that up as a little case study that we trade into that for patchwork. Then we trade higher, order block, displacement, BISI on the 1 minute. We trade into here, then we deliver to the lunch highs. Then what do we do here? We drop down into a discount. We drop down into this BISI on the 1 minute. Then we get displacement, generate smooth highs. This BISI gets engaged here. And then what are we doing? Final hour macro. Notice how there really isn't anything delivered here at all. We're kind of already within the most important arrays. Lunch has delivered very nicely, very smoothly. We're kind of back to where we opened the session at. We're kind of back within that opening range gap, constant encroachment. So therefore, since we've already just delivered this, end of day macro isn't really gonna do much. And then what do we have here? 4 p.m. I assume there's earnings here. And then where do we displace from? Stop hunt. New day opening gap. We displace from that. And boom. Carnage hits the market. And this is where I want to point out, where does a low of the day form after earnings? A new week opening gap. Like, this is textbook. This is textbook. This is very nice, very algorithmic, and like this is everything that I would want to see within the intraday charts. You have a bunch of volatility. You have stop ons. You have multiple models. You have your lunch macro delivering beautifully from a discount. You have SMT showing smart money accumulation of their positions, and yeah, like everything's beautiful, and everything is delivering exactly how it should. And that's all I have for this one. I will catch you all in the next one.